also have some advisory mandates, so total assets under management that we have is 950 million. Currently, we have 6 different investment products. I'm going to talk about them very briefly in a second. We focus on private debt, mainly through our Luxembourg SICAV RIFE vehicle. Within private debt, I would say that we have an extremely conservative approach. So most strategies, they are senior secured lending strategies, relatively short duration, strong collaterals, strong downside protection. And you can see when I'm going to talk about the examples, so downside protection is very important for us. And it's also important to mention that the ESG factors come into play when we talk about downside protection, because obviously it helps a lot to reduce risk when we provide loans. We have around 30 employees in 4 different locations. Maybe I'm not going to talk too much about the founders, but we are 3 different principals in Katch Investment Group. Stéphane Prichon is our CEO. We have Laurent Chomard, our chairman, and myself, I'm the CIO. We all have a lot of experience in investment management, portfolio management, investment advisory, asset management, alternative investment management, and so on. Myself, I come a bit more from research and advisory. Laurent, his background is alternative investment management, always in asset management. And then we have Stéphane, who has investment banking and asset management background. In terms of our different investment products, as I said, we have a SICAV RIFE structure. All our funds, they are structured as open-ended funds with different liquidities, depending a bit on the liquidity of the underlying assets that we have in the different funds. Our biggest product is the Global Lending Opportunities Fund. It's more a diversified product with exposure to different strategies like senior secured lending, bridge lending, receivables as well. It's very diversified. Nowadays, we have around $130 million in assets under management in this product. It's a very liquid product. The duration is very short. We also provide monthly liquidity to investors, 45 days notice for redemptions, and it has an 8% target return. The performance so far has been extremely stable, robust, also during tough economic conditions, which was a validation of our setup and our strategies as we positioned ourselves as fixed income alternative managers. Then we have our real estate lending fund. It's only doing real estate bridge lending in the UK. It's a very plain vanilla, easy to understand strategy, I would say. We don't do any leverage. All loans are secured by first lien charges on properties. The duration is very short. I think the average remaining duration right now is about 6 months. So it's a very short duration portfolio. A lot of maturities coming to the portfolio all the time, which also enables us to provide liquidity to investors. We have very limited exposure to development and construction. Most of the projects are really plain vanilla line refurbishment projects, low risk, I would say. So it's really a fixed income alternative product as well. Then we have a factoring fund, factoring in Brazil. We do receivables, and we also do short-term loans that are backed by real estate in Brazil. This fund has a 10% target return. And as I said, it's fully focused on Brazil. When we talk about obviously ESG and impact investing, it's a fund that has quite an important role. And I'm going to illustrate that as well with an example later on. We have our European Secured Lending Fund, which is our newest product. It's a bit less liquid. We have semi-annual liquidity and 270 days notice. We do senior secured loans in Europe, UK, Scotland, Benelux, Scandinavia, Germany, France, Spain. These are the countries where we currently have loans or where we are currently implementing loans. The duration is a little bit longer. So we do loans typically between 6 months and up to 3 years. Could eventually be even longer. And that's also why we have a bit less liquidity than we can offer to investors. It's semi-annual liquidity and 270 days notice. And the fund has a target return of 10%. Currently, we are getting to 50 million in assets in the fund. And we believe it's going to grow very quickly to 100 million in the next couple couple of months, there is a very strong interest. It's interesting because the fund is very opportunistic. So oftentimes we provide loans to potential borrowers that have a short-term liquidity need, or they want to pursue a short-term business opportunity. Ticket size usually is between 5 and 20 million. It's an area where there is not a lot of competition because a lot of the banks retreated. So it's also, we are enabling businesses or projects, which is a very important factor also when we talk about impact. The good thing is that usually sometimes if we don't provide the loan, there is not really an alternative funding solution for the borrowers, which means that we have a relatively strong bargaining power in terms of pricing, but also we can ask for a lot of collaterals, typically first lien charges on real estate as well in this strategy. So it's a fund that we believe has a very good future for the next couple of months and years to come. And finally, we have our litigation fund. We fund claims in the UK. Different strategies. It's very well diversified. I'm going to talk a bit about litigation also with an example that is going to come later in the presentation. So we have these 5 different funds that we have in Luxembourg, and then we also have a node that is called the high income alternative node, which is a different investment product, but it has a very similar investment approach as well. And for all the different strategies that we have in Katch Investment Group, for us, it's very important to incorporate ESG factors and also impact investing considerations. We are basically a young company, so we are still learning a lot in ESG, to be honest. So I mean, we are very concerned about the environment and other social governmental factors, but we are currently still in the process to make some important steps. For example, we are, I guess it's going to be relatively soon that we will be signing also the UN Principles of Responsible Investments, which basically is a commitment for us as well. But that basically says that we incorporate the ESG factors in our investment decision process across all our different strategies. So for those of you that don't know the UNPRI, it's basically an international organization that works to promote the incorporation of ESG factors for investment decision making. And I guess that relatively soon we can announce that we will be signing that. And then we have some additional ESG initiatives. But personally, while I think it's important to show some commitment and also to sign these principles, even more important for me is really to show you with some of the examples that we have in the portfolio, what we do. So really to get a bit more color with concrete examples, which is for me much better illustration of how we think about ESG. But before we go into the example, I give the word back to Clement, who is going to give a general introduction also on ESG, especially also for those that might be a bit less familiar to the ESG concept.
Thank you, Pascal. So we're going to move to the next slide. All right. Thank you, Pascal. So for the one that have been following the investment news, I'm sure you have seen the term ESG coming up more and more often. So ESG investing, which is also known as sustainable investing, is an investment approach that takes into account a set of factors alongside traditional consideration when undertaking an investment opportunity. So when it comes to ESG, most of the time people tend to focus on the environmental factor, which is understandable because climate change has been at the forefront of many discussions, but in reality, ESG is composed of 3 different factors. So we have the first one, as I just mentioned, the environmental factor, which considers an investment's impacts and consequences on the environment, but also the efforts taken to limit those. So factors could include climate change, greenhouse gas emission, resource depletion, deforestation, among others. The second factor, the social factor, considers the relationship with and the fair treatment of stakeholders such as employees, clients, and suppliers. So, for example, could include usage of child labor, non-compliance with minimum wages, but also enforcing physically contaminated working environments. Last but not least, we have the governance factor, which considers the implementation of fair corporate governance, leadership, audits, internal control, and also shareholder rights, among others. So this was a short introduction to ESG. I will now let Pascal walk you through a set of examples demonstrating how we incorporate those factors within our investment decision process.
Okay, perfect. Thanks, Clem. Before I go to the examples, we also published the ESG quarterly report very recently. I don't know, Clement, is it on the website or on the data room? Otherwise,
not yet on the data room. We are working on that. We sent it with our last mailer. We will send it again next month with our fact sheets.
Oh, okay, perfect. So basically, the report summarizes also with the examples that I'm going to talk about. So you have the opportunity also to review it and to reread it, and also to show it to colleagues and clients and so on, if you wish. Important also to highlight that, of course, we, as I said at the beginning, we are very conservative in our investment approach. So we are always thinking about, every time we do a loan, we always think about what could go wrong and how we can protect ourselves, you know, with the amount of guarantees, collaterals, and so on that we take, which is usually extremely important for us when we implement the different loan agreements in the underwriting process. And of course, when we talk about the downside risk, as Clement explained, also with the E in ESG and also the other two letters in ESG are very important to, you know, to avoid eventually that the potential borrower might get some potential liability in terms of, you know, environment and so on. You don't want to lend to a company that is polluting too much, because this can always create an issue going forward. So by nature, when we talk about senior secured lending with a very strong risk management, ESG is important. Even if we didn't know anything about ESG, we would automatically include ESG factors in our investment decision-making process, because it's just a natural part of the risk management process. So talking about some examples that we have in our portfolio in the different investment products that we managed. We have, for example, we funded one project in Belgium, in Maasmechelen, which is a city close to the Dutch and German borders, like in the three-country triangle. It's a very nice project. It's basically a sustainable housing development of 410 flats. It's interesting because it's really sustainable. You can see it on the picture. Maybe there is a lot of greens. It's next to the canal. It's eco-friendly, energy efficient. You have a lot of socio-cultural facilities, you know, sport activities, recreational areas. There is hiking and cycling and so on. So we really believe that it's a project that has a strong ESG angle. And also in terms of economics, it's an interesting investment for us, because you can see that the LTV, the loan to value, is only 53%. So it's relatively low. And we have an interest rate of around 11.4% for the whole project, with a duration of 36 months. We have a next example, which we also funded via our European Secured Lending Fund, which is a very interesting ESG example, because we provided a loan to a impact investing fund, and it's a fund that has a very strong impact. It's a private equity real estate fund. It's an agriculture fund, basically, that has mainly exposure to emerging markets. They have a net asset value of around $250 million US dollars. So it's a relatively big fund with a lot of big LPs invested in the fund, pension funds. I think they invested around 210 million, and now they made a bit of a gain over the last 8 years or so. The fund came to maturity, but during COVID, so they needed to extend the life of the fund for another 2 years, and we provided working capital, which basically makes sure that the the fund's operations, they continue to operate normally. There is no interruption in their businesses. And also the fund can be liquidated or passed through a new structure or to a new investor in a very controlled and structured way. So we did a loan of $9 million US. I think it was $10 million US. I need to double check that. The LTV was only 4% because our loan is senior to all the LP interest in the fund in the waterfall. So I mean, I should never say no risk, but I mean, it's extremely low risk in this investment because I mean, a lot of the assets they have in the fund is land or real estate assets. So it's very safe from our perspective, and also the interest rate is pretty interesting. When it comes to the impact, I mean, I cannot go too much into details, but their portfolio companies, what they did is they basically employed 6,100 people in poor countries, and for them it was an important income with salary increases. And the portfolio management company, they are based in the UK. They basically estimate that thanks to this income or the job that they provided to 6,100 and people, that it has a positive impact on the life and economics of around 1.6 million people in emerging markets. So for us, it was obviously very interesting to be part of this project because they have really a very deep impact in some poorer countries. Also, the asset manager, they won several prizes as Impact Investor of the Year and some other prizes as well, which validate basically their focus on impact investing. We have another example in our fund. This time, this is in the Global Lending Opportunities Fund. It's a sustainable housing project in Spain, in Malaga, for the University of Malaga. I mean, it's also energy efficient, sustainable project. There is a lot of green areas, parks. It's all about connectivity. So you have interactive campus, students that can be outside, interact outside. So it's also a project that has a strong sustainability angle and should also help to boost education, of course. For us, also the economics, they were interesting, relatively low LTV as well here, backed by real estate, the first lien on the real estate, on the land, and an interest rate of 12%. So you can see that it's oftentimes possible to combine strong economics with ESG considerations. And then we have a wonderful example from our litigation strategy. I mentioned litigation only very briefly when I was doing the introduction. But I mean, first of all, litigation funding in the UK recently got a very positive comment from UK courts that validated the importance or acknowledged the importance of litigation funding, because maybe in the past litigation funding not always had like the best reputation when, you know, access to information was a bit more limited. But nowadays it's so important that that basically you enable justice to a lot of people that otherwise wouldn't have it. So what the courts, the UK courts said, and I'm going to quote it, so I'm going to read it, so I'm not going to get it wrong. They said that litigation funding is a well-recognized feature of modern litigation that facilitates access to justice for those who otherwise may be unable to afford it. So it's basically what we always believed: you enable justice if you provide funding to some people that have a valid claim. In our case, it's especially the case because we focus on smaller claims, individual claims with a relatively short duration, which is also important for us in terms of risk management because you know, litigation has very attractive economics. In our fund, which is now getting to 50 million, if I'm not mistaken, we have already over 3,000 different claims in the portfolio. Duration is very short, and also you have several layers of protection when we provide the loans. And a very good example is the one that we have here on the slide, which is the cavity wall insulation claims. So basically what you have is you have in the north of England, there were you had a lot of construction companies, builders that built houses with some faulty installation of cavity wall insulation. So you had basically humidity in the wall, so they wouldn't insulate enough. So these claims are valid. I think we are talking about a huge number. It's around 7 million houses or something like that. So there are a lot of people that were affected by this type of construction. And interestingly, and this basically also confirms what I just said, interestingly, a lot of people, they gave up because of the lack of means. So they wouldn't pursue any suing anyone because they don't know how, or they don't have the economic means to do so. So when providing funding to these people, you really enable them to get justice, which is very important. So it has a positive impact on their lives, you know, their quality of life, the living conditions, and so on. And also, and that's certainly something that we hope a lot, is that the claimants, once they get the claim benefit out of the claims, they most likely will use at least part of the money to repair the houses and to improve the walls, the insulation, which basically also means that you know, the houses, they become more energy efficient. You're going to need less energy, like gas or heating oil, to heat or to cool the houses, which is also a positive environmental impact. So it's a very nice example of several layers of ESG considerations that we have in our litigation fund. And here as well, in terms of investment, it's very attractive because as funder, our facility is not only protected by the claims, but we basically provided a loan to a law firm, and we have several layers of protections and collaterals that we get also from the law firms that protect our downside. So it's a very conservative investment at the same time. Finally, we have recently made a loan to a very innovative clean tech company in the UK. It was a loan that was backed by a land acquisition and for the preparation basically to create a factory. It's a factory for batteries for electric vehicles. So there's not much more than I need to say. It's going to be an important investment in the UK. It's going to create a lot of jobs. And of course, it is going to support the trend from traditional gasoline and diesel cars to EVs. You know, batteries are an important part of the equation. There are other important parts as well that, I mean, at some point we hope that we can do additional investments that target this industry. I like it a lot, the whole EV industry. So you have the batteries, the electric grid, and so on. That is very important for the future, for the transition. Of course, there are also other initiatives, but it's a very good example here as well, that how we can combine ESG factors or ESG considerations with economics that we get in our fund. So this loan was provided by our European Secured Lending Fund. We have an interest rate of about 12.5%, an LTV of only 13%, and the loan size is £7 million. So again, an extremely low LTV, which basically means you have the value of the land is around 7 times higher than the value of the loan that we provided, and it's going well. So eventually we're going to be paid back early. We will see, but the risk was also extremely low for this specific example. I think we have one example more. All these examples, by the way, all these examples, we have them in our ESG report that we're going to send together with the replay. So we have an additional example that we have in our factoring fund in Brazil. So factoring in Brazil is obviously a fund that is important when we talk about economic impact, because in Brazil, maybe for those of you that don't know the Brazilian receivables area or industry, in Brazil, it's a regulated activity. It was created 17 years ago and mainly because the banking sector is pretty inefficient when providing loans to SMEs, to small and mid-sized enterprises. A lot of smaller companies, they just don't have access to funding, or the rates are extremely abusive that the banks would charge. Interest rates in Brazil, they always have been very high. But in some areas, even when the Selic, the Brazilian central bank, reduced interest rate to 2% earlier this year or last year, average bank lending rates, they were still at around 25% in local currency in Brazil. And of course, loans to consumers and to smaller companies, they were even much higher. So it was also it's pretty normal to see very high interest rates in Brazil. So the private sector plays a very important role to provide funding to smaller businesses, which, you know, smaller companies, like everywhere, are obviously the backbone of the economies. They create a lot of jobs, they contribute to economic growth and so on. So factoring per se, and especially in emerging markets, we believe has a strong economic and social impact. But I wanted to use one specific example that we have in one of our strategies, one of our factoring strategies in Brazil. We provided working capital via the purchase of invoices from a rubber manufacturer. It's interesting because this counterparty, this borrower, has a very strong ESG policies. They are very strong when it comes to recycling, rainwater storage, rainwater collection and rainwater storage, waste collection, and so on. So what they basically do is they buy tires, and then they recycle them, and then they basically produce you know, the rubber raw material. And just to give you a fact, on a monthly basis, they recycle more than 370 tons of tires, car and truck tires. So they have a very strong impact when it comes to the recycling activity, amongst other things that they do. Finally, I just wanted to briefly mention the Katch Foundation. It has nothing to do with the investment funds that we manage, but it's just a sort of a private project that we have. You can see a very nice picture here on the slide. So what we basically do is we help that poorer children in rural areas in Panama get access to education and also materials for school. So on the picture, you can see that two of our own, our portfolio manager, GLO portfolio manager, Jose Luis Fabrega, and our investor relationship manager, Monica Alfaro, they went to give backpacks and other notebooks and other type of materials to children in Panama. It's a small thing, but it was just nice to mention that obviously we also care about the regions and the areas where we are, and we are highly committed to do some additional effort to contribute positive to the society, and especially the ones that suffered most from the recent crisis that we have during the pandemic. I always say that we are fortunate because we are now doing this webinar. We do a lot of Zoom calls. We never stopped working, but a lot of people, they were much less fortunate during the crisis, and it had a very strong impact. So we are very happy that we contribute a little bit also to improve the lives of the poor. I think that's it. Yeah, I mentioned all examples. As I said, the different examples, they are available on the ESG report. So that's all I wanted to say. I hand it back to you, Clement. Maybe we can open the floor for questions.
Yep. If you have any questions, you can click on the question window and ask us any question that you may have. Right now I'm looking at it. We did not receive any as of now. Let's wait a minute maybe.
So, I mean, if there are no questions, and we are also going to send the replay, and of course you can always reach out directly to us. We can send you your report if you were not able to find it. And we're going to update you on a quarterly basis on our different ESG initiatives, publish also our report on a quarterly basis. And I just wanted to thank to all of you for attention. And also, I'm not sure whether we're going to talk again, but I mean, it's almost Christmas. So I also want to take the opportunity to wish you all very pleasant holidays. Happy New Year to everyone. And as I said, we are always available if you have questions. So please do not hesitate to contact us.
All right, thank you very much, everyone, for connecting today. We will be sending the mailer during the day with the webinar replay and also the ESG report that Pascal was referring to. So again, feel free to let us know if you have any question. And we'll see you soon for the next webinar.
Perfect. Thank you so much. Cheers. Bye-bye.